If you look at what's happening to gold, the last month it's up, the last 3 months it's up, the last 6 months it's up.
In a world of financial uncertainty, Steve Hanke makes a compelling case for selling stocks and investing in gold. He argues that the U.S. stock market is in a bubble, while gold continues to show strong upward momentum. If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more. The bullish case for gold. Gold has shown remarkable resilience and strength in recent months. It has consistently risen in value. This trend reflects a growing confidence among investors in gold as a safe haven. The reasons for this bullish sentiment are manifold. First, gold acts as a hedge against inflation. As central banks increase the money supply, the value of fiat currency often declines. Investors turn to gold to preserve their purchasing power. Moreover, geopolitical tensions contribute to the appeal of gold. Unrest in various regions creates uncertainty. This uncertainty drives investors toward gold, which is seen as a stable asset. Additionally, the current state of the U.S. stock market raises concerns. Many analysts believe the market is overvalued. A significant correction could lead to a surge in gold prices as investors seek safer investments. The historical performance of gold during economic downturns supports this view. Gold has consistently outperformed stocks in times of crisis. As the financial landscape becomes increasingly unstable, gold's allure only grows stronger. Understanding the U.S. stock market bubble. The U.S. stock market currently exhibits signs of a bubble. This situation is characterized by inflated prices and excessive optimism among investors. The market's growth has been driven by speculation rather than fundamentals. Historically, bubbles tend to burst when the reality sets in. Investors may suddenly realize that prices do not reflect actual company performance. This realization can trigger a sharp decline in stock prices, leading to panic selling. The concentration of market capitalization in the U.S. is staggering. Around 70% of the world's market cap resides in U.S. markets. This dominance raises questions about sustainability. Such a skewed distribution is rarely seen without consequences. Many analysts warn that the herd mentality among investors is a red flag. When everyone believes the same thing, it often precedes a market correction. This collective optimism can mask underlying risks, leading to a sudden shift in sentiment. As the bubble grows, the potential for a sharp decline increases. Investors must remain vigilant. Monitoring market trends and understanding economic indicators is crucial in these uncertain times. China's role in commodity markets. China significantly influences global commodity markets. As one of the largest consumers of raw materials, its policies can have far-reaching effects. Recent statements from Chinese authorities signal a desire to stimulate economic growth. China's money supply growth is a key indicator to watch. If the Chinese government successfully increases its money supply, it could boost demand for commodities. This increase would likely lead to higher prices across various sectors. Moreover, geopolitical tensions also play a critical role. The U.S. has imposed restrictions on certain critical materials. This action has resulted in price spikes for commodities like antimony, showcasing how quickly market dynamics can shift. The interplay between supply and demand in the commodities sector is complex. China's ability to manipulate its money supply affects not just its economy, but the global market as well. Understanding these dynamics is essential for predicting future trends. If you're curious about investing, you might want to check out Interactive Brokers. I found their platform useful, and the link is in the first link of the video description. The impact of global market dynamics. The global market is currently facing unprecedented challenges. Economic instability is widespread. Various geopolitical conflicts exacerbate these issues, leading to heightened uncertainty. The war in Ukraine is a prime example. It has disrupted supply chains and created volatility in energy prices. The consequences extend beyond the immediate region, impacting global economies. In the Middle East, ongoing conflicts further complicate the situation. These tensions can lead to sudden spikes in oil prices. Such fluctuations can have a domino effect on various sectors, including transportation and manufacturing. Additionally, the economic policies of major economies like the US and China are crucial. As they navigate their own challenges, the ripple effects will be felt worldwide. Investors must adapt to these shifting dynamics to protect their assets. In this volatile environment, gold shines as a beacon of stability. Its historical role as a safe haven asset makes it an attractive option for investors. As global uncertainties mount, the case for gold becomes increasingly compelling. Investment strategies amidst economic instability. In times of economic instability, strategies must adapt. Investors need to rethink their positions. Traditional methods may not suffice in a rapidly changing landscape. Many experts suggest reallocating assets towards safer havens. Gold has emerged as a primary choice. Its historical performance during crises supports this shift. Moreover, diversifying investments can mitigate risks. In a volatile market, spreading investments across various asset classes is wise. This approach helps cushion against sudden downturns. Investors should also consider sectors that tend to thrive in uncertainty. Defensive stocks, such as utilities and consumer staples, often perform well. These sectors provide essential services and products regardless of economic conditions. Additionally, keeping an eye on global economic indicators is crucial. Monitoring inflation rates, interest rates, and GDP growth can inform investment choices. Understanding these factors can lead to more strategic decisions. Lastly, maintaining liquidity is essential. Having cash readily available allows investors to seize opportunities when they arise. This flexibility can be a significant advantage in a turbulent market. Geopolitical tensions and their economic implications. Geopolitical tensions significantly impact global markets. Conflicts can disrupt supply chains and create uncertainty. This uncertainty often leads to increased volatility in financial markets. The ongoing war in Ukraine is a prime example. It has caused energy prices to fluctuate wildly. These fluctuations affect not only Europe, but the entire globe. Furthermore, tensions in the Middle East contribute to instability. Conflicts in this region can lead to sudden spikes in oil prices. Such price increases can ripple through various industries, affecting everything from transportation to manufacturing. Trade wars also complicate the situation. Tariffs and restrictions can hinder trade flows. This disruption can lead to increased costs for consumers and businesses alike. Investors must remain vigilant amid these geopolitical dynamics. Understanding the implications of conflicts and trade policies is essential. Strategic positioning can help mitigate risks associated with such uncertainties. The future of commodities. The future of commodities looks promising despite current challenges. Demand is expected to rise as economies recover. This anticipated growth can drive prices higher. China plays a pivotal role in this landscape. As one of the largest consumers of commodities, its economic policies significantly impact global supply and demand. If China successfully increases its money supply, demand for commodities will likely surge. Moreover, geopolitical tensions can create supply constraints. Restrictions on critical materials can lead to price spikes. The recent rise in prices for antimony serves as a reminder of this dynamic. Investors should monitor these developments closely. Understanding the interplay between supply and demand is crucial for predicting future trends. As the global economy evolves, so too will the commodities market. Assessing the risks in current investments. Assessing risks in current investments is vital in today's market. Investors must evaluate their portfolios regularly. Understanding potential vulnerabilities can help in making informed decisions. Market volatility poses a significant risk. Sudden shifts can lead to substantial losses. Diversification remains a key strategy to mitigate this risk. Additionally, geopolitical events can create unforeseen challenges. Investors should stay informed about global developments. Keeping abreast of international news can provide insights into potential risks. Interest rate changes also impact investment strategies. Rising rates can affect borrowing costs and consumer spending. This shift can lead to slower economic growth, impacting various sectors. Finally, maintaining a long-term perspective is essential. Short-term fluctuations can be misleading. A focus on long-term trends helps investors navigate uncertainty more effectively. Final thoughts on market trends. As we look ahead, market trends will continue to evolve. Economic instability and geopolitical tensions will shape the landscape. Investors must adapt their strategies accordingly. Gold remains a strong contender as a safe haven. Its historical performance during crises reinforces its appeal. As uncertainties mount, the case for gold becomes increasingly compelling. Moreover, staying informed about global events is crucial. Understanding the implications of geopolitical dynamics can inform investment decisions. Knowledge is power in navigating these turbulent waters. In conclusion, a proactive approach is essential. Investors must remain vigilant and adaptable. By doing so, they can safeguard their assets and capitalize on emerging opportunities. After exploring various investment platforms, I found Interactive Brokers to be a good starting point, especially for beginners. Click the first link in the description for more information.